besides just investing.
And then talking about sectors and stocks that are proving themselves, that turns us to sector spotlight, which will be cloud computing for the day. Really, tech was leading yesterday. Cloud computing is one of the best subsectors in there. Do you think that this subsector will really lead that rally?
Well, this is going to be a barometer for me because we've seen individual stocks break out. We've seen some healthy in pockets, but I like to see actually a group break out and continue. And the cloud stocks have been the innovators. They've been really strong, and these patterns are setting up. So I want to see some of them start breaking out and going to show us real power in this follow-through. So the first one I'm going to look at is CRM.
Right. Before we get to the individual stocks, though, I just want to talk in general. I'm a little conflicted with the sector because on one hand, I think that it's really expensive.
Right.
But on the other hand, I think that, you know what, it's not going to have any exposure really to the euro, right, or what happens with Greece or Portugal or in the EU. So isn't that a good thing? So I'm kind of torn. I just want to get your general take on which camp you kind of fall in.
Well, most expensive sectors are expensive for a reason because there's growth there. We talk about growth stocks. A lot of people want to stay away from the ones with the highest PEs, but typically those are the ones that have growth. They're the ones who have a bigger future, so it takes some time for that PE to catch up, so to speak. So right now we just have to really focus on the action and the charts so they don't keep you away from buying the fastest movers, best performing sector.
Which is a perfect segue to what you brought up. Salesforce.com trades at almost 58 times EV/EBITDA, but like you said, has a huge growth potential. So let's take a look at this chart.
Okay, CRM has been acting very well since earnings. I've talked about this with you many times. We talked about this 6-month consolidation by the institutions. Here was your earnings day. It held it, and now it's moving higher. I think if you're an investor, you're already probably long. If you're a trader, you're looking for this thing to break above 152 to 154 for some more momentum. But right now, this is acting well. This is leading that group.
If you're not long as an investor, you need to wait, I'm guessing.
No, well, right now it's consolidating. I'd say you could be in a sum or small, but really it's hard to play for momentum as an investor. But if you think you can handle it, just being small, just to be involved, maybe tier 1 around here.
And I want to talk VMware versus EMC because VMware trades at almost 29 times EV/EBITDA, but EMC trades at 10. And it owns 80% of VMware. So I wanted to see what your take was on these two stocks. Maybe one's trade, one's a long-term investment.
Right, well, both are acting very well, and EMC, which we've spoken about a few times, and I think some have already entered it, is acting well. It's one of those chosen mega caps, kind of like an Oracle, or lately it was Intel. So if you look at EMC, it looks good here, and it might actually be really good for a trade. Sometimes you get that day, and if you look at EMC, last time it had a nice consolidation after a big move. There was a nice breakout day, so now we're consolidating again. Hopefully you're in a little bit here, and then we might get a breakout trade above this 2860. So it's good for an investor. But as far as VMW, this has been on my go-to list. It's come off and on based on market dynamics, and right now it looks good again. It's building the right side of its current upper base, and I'm looking for a move above it, hopefully sooner than later. They also took out a company yesterday, so I'm going to look into that. But VMW, this was that earnings move. Here it's been holding this right side of the base. If you want to take a macro look at it, you will see it's had a big move. It put a little bit of a double top and then absorbed it, and now it seems as if this can get above this 98, 99. I'm going to be there with some size because it could get a little exciting right there.
All right, let's look at Riverbed versus F5 Networks because they compete. So let's look at the charts and see which one might be a good trade.
These two are more of the laggard plays. They're at the bottom ends of the ranges, not at the top. So they could get some action, but they're not. You should be in the other ones first. If you want to have more exposure, then that's fine. Riverbed, decent, chart pattern down here. I do think that it needs to get above this pivot. I would actually get involved in a trade here if this starts to get above. What is this? This is like 38.50, 39. It had a move right here when it broke this lower wedge. It's starting to get above the moving averages. So this looks okay. And as far as F5, it too, as you see here, lower level versus the higher level. But there are some trades if you're not stuck in it. And I would have rather have seen you buy this around 109. And now there is some room to 120. I think you stick with the first three versus F5.
And let's wrap it up here with Acme Packets. So last week the CEO sold about $4 million worth of shares. It didn't amount to that many shares, but you never like to hear that. Right. So what do you think about the chart for this one?
Let's take a quick look. I haven't looked at this one in a while. You know what? It's a tight pattern here. If you look, you have a nice descending trend line right there, a nice support. You have a big base here of 4 or 5 months. You know what? If this thing starts to break above 76 or so, I would be here for a trade. I think you'd be in maybe tier 1 or wait for a confirmed breakout above this downtrend. This actually looks pretty good technically.
But some analysts think that it's growing too fast, sort of like the China syndrome. It's still growing, but too fast, and they can't sustain it.